Welcome back to another Stock Market Open live stream. Today we get to cover some good old retail. We got what do we have this morning? We got retail sales and let me see. We're gonna pull this up here. We've got data coming out in just 2.5 minutes, so we're gonna go through exactly what we've got, and this will be entertaining. It's always nice to see what we get after our CPI releases, and we'll see how the day goes. Market is obviously been pretty excited for roughly the last, I don't know, like 4 months. So let's see, is there anything that can derail it? Is it going to be JPOW? Is it going to be data? What's it going to be? So we've got retail sales and PPI. That all comes out within the next about 100 seconds here. We're going to get retail sales. We're looking for retail sales advance month over month, 0.8% growth. It's a pretty good number. X auto and gas, though, really suggesting that auto and gas are contributing to the number here. We're only looking at 0.3. So let me see here what we have on gas. Gas, and just overall. Well, we know oil's up at $83, but I don't know. That's interesting why they think auto and gas is going to push so much. So, well, no, we're at 84.5 now. So Brent's been sneaking up. So maybe that. Yeah, actually, oil's been sneaking up since it was about $75 in mid-December, and it's been going straight up. Well, maybe not straight up, but it's been trending up from 75 to about 85 for about the last 3 months here. So that might be one of the reasons we're seeing such a boost there in retail sales advance. Then control group looking at 0.4. As far as PPI, so the producer price index, this is a pretty big deal for margin at a lot of companies. We are looking, and this one usually comes in way lower than CPI. So this hopefully will be good news. But we're looking for PPI X food energy trade to come in at 0.3. So we'll see what we get here, but it'll be pretty exciting. So all of these numbers due out here within the next 30 seconds. At the same time, we've got Bitcoin at 72.7 and futures across the board slightly green. All right, here we go. Retail sales, okay. PPI comes in hot. We've got final demand PPI coming in at 0.6 versus 0.3. X food and energy comes in at 0.3 versus 0.2. X food, energy, and trade comes in at 0.4 versus 0.3. Year over year comes in at 1.6 versus 1.2. And year over year X food and energy comes in at 2 versus 1.9. Everything comes in hot. Across the board on PPI, we're hot. You've got initial jobless claims coming in lower than expected, 209, and continuing claims at 1811, no big deal there. And then retail sales actually come in a chunk weaker here. We've got the control group coming in at flat. We were looking at 0.4, we got 0. X auto and gas, 0.3, we did match 0.3. X auto, we got 0.3 versus 0.5, and then retail sales advance, we got 0.6 versus 0.8, with a downward revision of about another 0.3 from last month's read, going from negative 0.8 to negative 1.1. So you actually got a little bit of a negative data set here, I'd say overall, mostly because you've got retail sales weaker here than expected. And let's, we'll get obviously the suits reaction here to this. But my initial take here is retail sales coming in weaker and inflation coming in hotter is kind of, when it comes to data, your worst case scenario. Let's listen in here for a moment.
Yields are going up. Now, let's switch gears, shall we? Let's go to retail sales. And remember, every one of these metrics was the weakest since March of 23 in terms of month-over-month change. So now, are we going to reverse it? We certainly did. Up 0.6. However, that's still less than we were looking for. And that 0.8 that was the worst since March of last year now becomes minus 1.1. And if you strip out autos, it improves excuse me, it does not improve. And this really is interesting because when you strip out autos and it doesn't improve, that really gives us some sense of what's going on in many of the other industries. It's up 0.3, 2/10.
Yeah. I'm looking for more comments here from Suits. They're not quite out yet. We're pretty early on this, but I think what you're going to see is this concern that, wait a second, more inflation, worse sales data. Damn it, right? Like that's doubly bad. That's the worst. You don't want to be in that situation. So we don't like that. Okay, let's try to get the producer price index report, and then what we're going to go for is we're going to go for the retail sales report as well. We're going to go into the actual reports so we can get a detail on them here. March 14th, tomorrow, by the way, the Ides of March. I don't know why that matters, but I'm bringing it up. Okay, let's go ahead and jump into the retail sales report, which is... we've already gone through all these. Come on. I'm pulling this up right now. Okay, be up in just a second here. All right. The reports are in. Here we go. So, I'm not going to read the numbers because we already saw the numbers. What I really want to see is the detail. Oh, yeah, I got to get the detailed chart. Oh, there it is. Got it. So, this is where we're going to be able to see where that weakness was. And I like to scroll down to the percentage one. So, monthly change, or estimated change in monthly sales. This is going to be preliminary January to February right here. Sorry. I really got to fix these cables. This is January to February right here. Retail, okay, here we go. So we've got motor vehicle parts and dealers. That came in up 1.6. And this is a comparison to last year. So we're up on motor vehicle parts and cars themselves. Furniture and home stores, how interesting. You actually got a negative here. Negative 10.1 year over year. That makes sense. Still getting negative 1.1 month over month, which is really interesting given Williams-Sonoma's massive beat yesterday. A lot of people think that furniture has just hit its earnings recession. And because the earnings recession, you're sort of potentially coming out of the hole. Now's maybe that time to pick up some good value deals. That's an opinion. Building material and garden, we've got 2.2% growth month over month. Food and beverage, 0.1. Gasoline, 0.9. Yeah, gas really popped off there. Yeah, so on the month over month, you really saw that move in gas prices. Non-store retailers up 0.6 versus 3.2 a year ago. General merchandise stores, 0.4. Non-store retailers. This is going to be your online online right here. Online is going to be negative 0.1, so that's probably a bigger category than miscellaneous store here. So negative 0.1 on the month over month. Sporting goods 0, clothing negative 0.5. So a little bit of a look here into where the heat is coming from. If I'm really going to analyze the heat, it would be building materials, electronics and appliances, auto vehicle and parts, and weakness, at least on the month over month, you can see that weakness in health and personal care. Oops. There we go. Health and personal care, clothing. You've got online. Just overall, the consumer is somewhat getting squeezed here. Okay, so that's our retail sales report. You can here take a peek at the way the Qs are reacting to this. And now we're going to get our PPI report, and then we should have some reaction from the suits. So, let's see here. PPI, what do we have? Yeah, you know what? For PPI, the chart is really annoying on that one, mostly because you get these 4 to 5 different stages of demand. So what I like doing from now on, mostly because I was thinking about this last month, is I'm just going to read their little summaries here. And this is a little bit easier to digest. All right. So, largest increase here, final demand goods. So the final demand goods section had its. Let's do that again. There we go. Come on. Oh, there we go. Stupid thing. All right. Final demand goods, largest increase since August of 2023. That's not good. Literally 70% can be attributed to final demand energy, which jumped 4.4%. Okay, but we pull that out anyway to get core. 1/3 can be traced to an increase. Oh, this is product detail. Okay, got it. So diesel fuel, chicken eggs, jet fuel, beef, veal, tobacco also rose. Prices for hay, oil seeds decreased. Fine. Final demand services. This will be interesting. Final demand services rose up 0.3% in February after rising 0.5% in January. Leading the February increase for final demand less trade was transportation and warehousing. I wonder how much of that has to do with the Red Sea. Transportation, warehousing rose 0.9%. Let's see here. Wait, index for final demand transportation. Okay, less. Sorry. The index for final demand services less trade, transportation, and warehousing increased 0.5%. So broad-based within that sector. Got it. Transportation and warehousing rose 0.9%. That means trade anchored services down. Okay. I write that down. Trade anchored final demand services down. Because all other services, once you take out trade, transportation, warehousing, led to a 0.5% increase. Okay. In contrast, margins for final demand services declined. Let's see here. The indices for outpatient care, airline passenger services, loan services, securities brokerages, dealing, investment advice, and alcohol retailing also moved up. These are all your sort of more structural inflation categories we were talking about yesterday. Conversely, margins for chemical and allied products, wholesaling fell 6.4%. Oh yeah, chemical is pretty volatile. Okay, what do we have over here? Energy. Specifically want to see a little bit more of these categories that are outside of the energy sector. Services for intermediate demand. Let's see here. Inched up 0.1%. Prices for services less trade, transportation and warehousing edged 0.1%. Okay. Where's the detail here? Loan services, blah, blah, blah. It's almost the same thing. It's almost a copy and paste. Yeah, so various stages of really just about the same kind of service and goods talk. Let me see here if we're getting a distillation at all yet from any of El Sudi's. Yep, this is what the phrase I don't want to hear. Stagflationary data mix is a bad one for stocks. Well, that's funny because the stock market is trying to push a green candle here. But anyway, that's a pretty unfriendly mix of data for risk assets. PPI was higher than expected across every aggregate. While we're roughly scrubbing the details now. Retail sales were lower than expected, with the control group looking particularly disappointing. That was flat. I'd expect to see GDP and nowcast markedly lower as a result. That's possible. Stagflationary mix kind of brings back memories of 2022. While you don't want to rely too much on a single month worth of data, you could certainly say from a macro perspective, this mix doesn't suggest that stock prices should be higher. Yeah, well, stock market don't care about your opinion, bro. So let's see here. Oh, yeah, okay. Let's take a peek at this. This will give you PPI over time. 1 second here. Let's take a peek at this. I think this is a good job here. Little zero hedge. Let's press that button. There we go. This is PPI month over month. And so you could see how we had these low periods in 2023. But again, how we're getting this nasty kind of uptrend once again on the right side there. January and February. indicating an uptrend. And then this is your year-over-year PPI, also indicating, I'll move myself for a second, indicating a bit of that uptrend here. So, unfortunate news on the stagflation side. Okay, very well. So let's see what they're saying over here.
No, and I don't think it should, right? I mean, I'm a firm believer that 1 month does not make a trend. And when you zoom
This is not
out,
1 month, this is 2. Because people looked at January as
several
1
data
month.
points do not make a trend. And when you zoom out and look at the trajectory of PPI, input costs have been coming down precipitously. They are, really coming down fast. Prices are coming down, but they're not coming down quite as fast. And so what is sitting in that gap, right? Your input costs are coming down, but your prices are high. That's big corporations sitting there juicing that gap for all it's worth. We see that in the data. We saw that, 50.
Okay, let's see here. So after this producer price surprise, it says here, traders are once again pairing their bets for Fed rate cuts this year and are realigning their expectations with the dot plot for just 75 basis points of reductions. That's another blow to risk assets. Yeah, it's interesting. That is an interesting move. It's this sort of suggestion that, let me look at the rate monitor. Fed rate monitor. Okay, let's see what we have. Okay. And then I want to see the break even. The break evens might take another 2 minutes or so to really show up. Let's see. Okay, so 98% chance no cut March. We already know that. 86.8% no chance for May. It's pretty much expected. You're pretty stable so far. I don't think these have fully updated yet. No, they haven't. We need to wait probably another 15, 20 minutes or so, and then we can really see these. Okay, that's fine. So, I saw that Treasury Secretary Mnuchin is thinking about putting together an investment group specifically for TikTok, which I thought was really interesting. What a guy. What a guy. He's just coming out of everywhere. Well, first it's New York Community Bank. Big old wedge deal on New York Community Bank. And then he comes flying in to what's it called? Now potentially TikTok bailout and putting together a group of people to buy TikTok. Wild. All right, so let's see here. What else do we have? So, luxury ships cancel stop at beach oasis in violence-riven Haiti. Yikes. I do want to get a little bit more, if I can get some more commentary on some of these numbers that we saw. I mean, I don't like hearing stagflation. Nobody does. That's like your worst case scenario. U.S. retail sales rose by less than forecast after a steep drop to the start of the year, underscoring concerns about the durability of consumer spending. Ooh. You've got the value of retail purchases adjusted for inflation increased points. Yeah, we saw this. Okay, we saw that. That's fine. 8 out of 13 categories posted an increase. Okay, what is that? 8 divided by 13, 61% posted an increase. Led by building material. Yeah, we saw that. Control group unchanged. Yeah, okay. That's no big deal. Let me see here. You did have Kohl's. When did Kohl's report? I think Kohl's was 2 days ago. Yeah, it was. Kohl's reported same-store sales in the fourth quarter that missed the average estimate, suggesting department store was struggling to attract shoppers after the crucial holiday season. Yeah. Oh, and did you hear yesterday the Janet Yellen talking about regretting calling inflation transitory and then suggesting that it was unlikely rates would return to pre-COVID levels? That I think that still surprises me. I still think the trajectory for the longer term is substantially lower. I do think it'll take substantially longer than we thought, even in the near term with rates. But what are you gonna do? So, okay, let's take a listen in here for a moment. What do they got?
Reporting better than expected profits and revenues driven in part by a better holiday shopping season. Dick's also gave full
The opposite of Kohl's.
ahead of estimates and raised its quarterly dividend by 10% to $1.10 per share. So watch the move there. Also on the retail earnings front, shares of Dollar General up roughly, call it 4.5%. Just around nearly 250,000 shares of volume. The discount retailer also reported better than expected quarterly results on both the top and bottom lines, driven in part by both customer growth traffic and also market share gains. That momentum is also helping it forecast full-year sales growth above estimates. Those shares higher, 4.5%. And we'll end on a non-earnings retail story getting a lot of attention. That's Under Armour. Shares are lower by about 6%. The company announced that current CEO Stephanie Linnartz would be stepping down from that role after a little over a year on the job, and that chairman and founder Kevin Plank will return to the CEO role. Meanwhile, Allianz chief economic advisor Mohamed El-Arian will become chairman of the board after serving as the company's lead independent director since the year 2020. So, and keep an eye on those particular moves here. Keep it right here. Squawk Box will be back after this.
Yeah, so that's interesting. Let me look at Dick's itself. I want to see if I can get a little bit more out of Dick's. And let's see here. Oh, let's see. Dick's. Dick's Sporting Goods, adjusted EPS 3.85 versus the 3.35 expected. That's pretty good. You've got net sales beat at 388. This is all for Q4, though. When does their Q4 end? Dick's Q4. Dick's Q4. Let's see. Dick's Investor Relations. So I want to see, is that just the end of the year, or are we getting any January data? That I think would be very interesting to see. Oh my gosh. I really hate the slide decks. Just give me the frickin' financials. Quarterly. Oh, of course it's not out yet. Dang it. Well, I guess I could just look at their annual report and see. Let's see when their annual ends. So they're 2022. My goodness, more slide decks. Their annual report. Ah, yeah. Their fiscal year ends January 28th. It's my birthday. So that does include a month of January. So I'm like, it seems a little late to be reporting Q4, but okay. And let's see here. Solid demand. Could see margin expansion as well. And surpassing expectations. Comp sales, though, only at 1 to 2% year over year. I just think that's so interesting. You get, a lot of industries just matching or facing high comps to really beat some of these numbers. So, all right. Did our break-evens come in yet? No? Still no? What is this? Okay, fine. What about projections? I mean, we saw this morning a little note already that traders are pairing rate cut expectations, but I have not seen that actually update just yet. No, still probably about 5 to 10 minutes away from getting that update. Okay, so we'll watch that. Then we have, let's see here. Real retail sale. Okay, yeah, real is just subtracting. Here's somebody who's basically just subtracted out inflation from the retail sales, so no biggie there. I mean, that we already know. This is going to turn it all negative. Okay, good. So now what? Let's see what else we have here. So if I go here, I'll take a peek. Oh, and Nick T has, I don't think Nick T is awake yet. So AI frenzy means more coming to NVIDIA semis? Not so much. What is this? After the artificial intelligence frenzy helped technology easily muscle already broadening forecasts for profit and growth, analysts are anticipating more exceptional growth from AI-friendly software and NVIDIA. At the same time, they're sharply pairing the outlook for Apple. See, I disagree with that. I think Apple has... Apple will surprise. I don't know. Who knows? Maybe it's the time for the death of Apple, right? So it'll be really interesting. The S&P 500 tech sector is on track for a whopping 24% EPS gain compared with the consensus forecast of 16.1%. Oh, what? That's a crazy beat. Margins at the sector showed improvement, 26.7 versus 25.4. Every industry cleared preseason earnings expectations. However, revenue expectations cut over at Apple, down 256 bips. Microsoft hardware down 12 bips. So Apple being cut the most. Interesting. Biggest growth expectation increases: NVIDIA, Micron, Western Digital, Roper. These had the biggest hikes to their current fiscal year revenue growth. Enphase, Texas Instruments, Teradyne, Analog Devices, and ON Semiconductor were cut the most. Yeah. All right. Very well. Next. Very well. Let's see. Next. We have very few actual updates coming in from the suits. I find that very interesting. So they don't want to talk about stagflation, I guess. So let's see if they got anything for us here.
Such an impact, but not necessarily that they've already done such.
I think what's clear from our reporting, Andrew, is that TikTok is controlled by ByteDance, which, you know, the Chinese government has a stake in the company. Our reporting has shown that. So there's no questions about the ties. Even a key app that now creators are using to edit their TikToks and is being integrated is held and controlled by ByteDance, the parent. The app's called CapCut, not TikTok. So there's no way you can really draw a bright line between them. And I think that is and should be a cause for concern.
What do you make of the board in terms of the governance of ByteDance?
All right, that's boring. Okay, what else? Let's see here. So, concerns. There we go. Let's look at Wall Street Journal. Steve Mnuchin says he's putting together a group to buy TikTok. Mentioned that. I want to see if there's a little bit more on this, though. I think legislation should pass, and I think it should be sold. It's a great business, and I'm going to put together a group to buy TikTok. Dude, the guy's got so much, like, control of, like, Saudi money now and just money. It's kind of crazy. After the Trump admin being Treasury Secretary, the dollar hollows just flow in. I wonder if Janet Yellen's going to have as much of an opportunity after she's done over at the Treasury. Diaper prices are up 600%, and cash shortages compound pain in Gaza. Ouch. Oh my gosh. It's 6, 7. It's crazy. Okay. Let's see here. What about the FT? Okay. U.S. held secret talks with Iran over Red Sea attacks. Oh, see, I always think stuff like this is interesting. It's like spy movie kind of stuff, you know. I don't know. I think it's interesting. But what do we got over here? So I'll leave Bitcoin up for a moment. The U.S. held secret talks with Iran this year in a bid to convince Tehran to use its influence over the Houthi group to end attacks. Well, those attacks must not have gone well, because didn't Biden just yesterday announce $10 billion in sanctions? Let me see. Did you hear about that billionaire that backed her Tesla into a pond and died? Yeah, I don't think it mattered that it was a Tesla there, but yeah, I did hear that story, and that was pretty sad. Just looking at some of your comments here. Yeah, Biden administration, faces critical decision on $10 billion in sanctions. Biden administration renews Iran's sanctions waiver, unlocking up to $10 billion. Wait, what? Renews? Biden administration on Wednesday reapproved a sanctions waiver. Oh, well, never mind. It's the opposite of what I said. Wait, rather than putting more sanctions on Iran, they've issued a sanctions waiver. Reapproved a sanctions waiver that unlocks $10 billion in frozen funds for the Iranian government. The sanctions waiver, which has drawn fierce GOP opposition on Capitol Hill, allows Iraq to transfer electricity payments to Iran via third parties. The waivers were approved by the Biden administration. Okay, that's going to take a little more time to read through, but we'll just stick to finance right now. Okay, good. So now let's see here. Okay, what about Yeah, I know we've got the rocket launch this morning. I think that'll be really fun, so we'll take a look at that. I'll enjoy that. Then we've got, what is this? PPI report shows profit margins dooming disinflation dreams. Oh, great. Oh, this is the same chart as yesterday. Well, it's similar. This is profit margins compared to cyclical PCE, the most, the parts correlated to Fed policy remains elevated. And then you've got profit margin proxy, that's falling. Well, yeah, I don't know. That one's a little bit of a harder chart to read. But anyway, it says, headline data PPI surprised to the upside again for February's data. The primary services component is BLS's attempt to estimate the profit margins of businesses that do not buy raw materials directly. Okay. A fast return to 2% is looking unlikely. RIP. Got it. Okay, so that's an interesting POV. What else here? NVIDIA faces sky-high expectations for AI conference. Yeah, I wonder how NVIDIA is doing today in the pre-market. Let me see here. NVIDIA is sitting at negative 165 in the pre-market. Back under $900. I mean, this one just bobs around after we got rejected at 974. NVIDIA's annual intelligence conference is just days away. That's on the 18th. Oh, it actually runs from the 18th to the 21st. Jensen's due to speak on the first day. His comments may help NVIDIA stock end a bout of volatility. Yeah, end a bout of volatility. I don't know. Volatility has been really good for the stock. If that's what you call volatility, it's been pretty good. So that's going to be Monday through about Thursday is what the event is. Introduction of new products expected. That's at least typically what they do. Kind of Apple product introduction event that everybody pays attention to. Blah, blah, blah. Okay. Got it. Got it. What else? Let's see here. Okay. I will look to see more reaction. Interesting. Peter Thiel dumps over 170 million in Palantir stock. This was March 12th. Peter Thiel, $174.6 million. And then Alex Karp dumped about 4.8. All right. Yeah, 4.8 million. Interesting. A lot of sales in that 22 to 24 range. I wonder how it's doing right now. Palantir is, oh, it's at 25 bucks. It's actually up in the pre-market. You've got, you're at negative 52 bips. I'm sorry, positive 52 bips on Palantir in the pre-market. 25 bucks is where we ended yesterday. Look at the day chart. Really, yeah, it's sticking on this support over here. Well, that's really interesting. Okay, so that's Palantir. All right, what's this? Here's a piece on Tesla. Oh, it's another bear piece. How bad is 2024 going so far for Tesla? Well, the stock is down more than Boeing, making it the worst performer in the S&P 500. 2 weeks away from the end of the first quarter. Let's see here. There's a distinct wobble in the metaphorical wheels. Okay, that's a bizarre way to put it. Electric vehicle sales, while growing at a healthy clip, are slowing both in the U.S. and worldwide. China, the largest EV maker in the world. Let's see here. What is this? Okay, sales were up the first 2 months of the year, but well, that's true. But we had that February, January kind of flip flop because of Chinese New Year. But a cutthroat market. Well, hold on a second. What was that relative to last year? Chinese New Year. Do we have that here? New Year. Let me see here. Let's see. Where did we talk about that? I feel like we touched on those January and February deliveries at Tesla. Let me see if I can find them really quickly. If I go here, let's see here. Oh, wow. There's so many searches on eHack. I think if I type in Tesla on eHack, I get, yeah, it's like 180, 180 hits. Oh, that's actually kind of cool, though, because it gives you a little bit of a history here. Where did I do? I'm pretty sure we covered January. Oh, there is another Deutsche Bank piece out on Tesla as well, so we'll look at that. No, I don't have it handy. Okay, fine. Actually, it may have been on. Whatever. Okay, we'll check the numbers in a moment. So then we've got electric vehicle sales, while still growing at a healthy clip, are slowing both the U.S., worldwide, whatever. Okay, what actual news do we have in here? Sales from Tesla Shanghai were down 6% year over year, suggesting sluggish demand in the overseas market. Temporary shutdown in Berlin hasn't helped either. Tesla ditched its annual growth target. No guy. I mean, this is all old news. Old news. It's really actually no update in there. Okay, fine. Let's listen in over here.
And
it's NVIDIA's market, and we're just living in it.
Although we're going to be down today, and the indexes are hanging in there. So on a given day, even when NVIDIA takes a break, so far, the last week or so, you've managed to kind of marshal, the other troops and say we're going to hang in there. So I don't know how long it can continue. Maybe we'll talk about Robinhood's numbers and how they're seeing massive volumes, and it seems like there's just an excitement around certain things, whether it's crypto and obviously AI. And on the other hand, commodities are starting to roll.
Yeah. Well, your general point then is that the market doesn't need the Fed as much.
That's right.
When earnings expectations are inflecting.
Exactly.
Earlier in the week, B of A went to 250 for the year on S&P EPS. Today, Savita has another note looking at what they call regime recoveries, which is essentially, in their view, a period in which the equal weight S&P outperforms the cap weight 78% of the time.
It should do so. It's doing so this month. I mean, it's obviously, barely, not even halfway through the month. Obviously, if it became a trend of progressively higher inflation readings, where the Fed has to really rethink the easing posture, sure, we might have a gut check. If the 10-year yield blasts out of this range above 430 toward 4.5, maybe then you have to have a rethink of the whole thing. But for now, I think there's an ability also to pick and choose what we pay attention to in the inflation numbers. I know insurance was a big upside contributor to the PPI. That's been a big one for CPI as well. You were talking about transportation services at being like,
yes.
Well, that's car insurance largely,
right.
And it's and to a degree airfares,
right?
And so it's not as if it doesn't matter. It's just if you want to make the bet that that's not going to continue. So we'll see. I mean, market's in a forgiving mood for now. I guess the other piece I would just more or less bring up is you do have earnings revisions higher. So you mentioned Savita doing that, but even on a company by company basis, it's managing to to kind of alleviate a little bit of the immediate concerns about, hey, this is a really expensive market.
Meantime, we're watching the biggest loser year to date on the S&P, which is Tesla. Gets another note to the downside today. UBS cuts from 225 to 165. It's the third price target cut we've seen in about a week after Deutsche and, of course, Wells yesterday, which went to 125, one of the lowest on the street. Market cap, David, now below JPM, and it's a worse performer on the S&P year to date than Boeing, than Warner Brothers, than Paramount, than Charter, than Humana.
Man, that's some bad company.
Yeah.
We've talked about it obviously often, as you might expect, and there it is. Yeah, J.P. Morgan's worth about $551 billion. Tesla's not, sort of about $10 billion or so below that, at least as we begin trading this morning. And again, it was down yesterday on that downgrade from Wells Fargo that we discussed in terms of their belief that the price cuts are going to significantly impact profitability, as you might expect, and they really do question sort of the ability of the company to significantly grow. And there you can see Boeing, obviously, also along with Tesla in terms of its very poor performance. You know, Mike, people are going to start to say, oh, how much is he levered on and things like that. Yeah. I kind of hear that on Musk. That's, you know, it's not part of this issue at this point, I don't believe. And they'll look at X, the old Twitter, and wonder, well, but he sold all the stock to pay for that. Obviously, the debt related to X is not related to his ownership. That's Morgan Stanley and a lot of other banks' issue in terms of what they're doing and where they've got that marked. But it's got to hurt.
Yeah, well, the refinance talks are interesting, though, because rates certainly aren't lower. So that's what's making some folks wonder if they're trying to get some of the debt accelerated.
Which we're on watch for another launch today.
And so it's not as if that's somehow cutting close to the bone, $65 billion, but it's way.
I could work with it. I could find a way to work with it.
Yeah. You know, if you're careful on the spending. I do think that what you're really seeing is just this massive premium bleed out of Tesla. Everyone's acknowledged that it was obviously valued as a lot more than an auto company. And now just the willingness to kind of give the company credit for being that much more just because of the potential, whether it's full self-driving, whether it's AI and robotics or whatever else.
Yeah, although part of the UBS call is not just China risk and unit volume or unit growth risk, but the notion that what if he does take robotics and AI and develop that outside Tesla? Would take away some of that, some of the parts.
Right. No, that's nonsense. That's not going to happen. Okay, I got the numbers that I was looking for. I was surprised I didn't actually have them on HeHack, but now we do. So China, February for Tesla, 2024 deliveries were 60,365. So what I did is I added these together. I think it was in a video we covered it. That was adding together January, February, and dividing that by last year's add together. And that gave us still just about a 20% decline for those 2 months year over year. Okay, so then this was the Deutsche Bank piece. I have it, and so I know some people were asking about seeing it. So I wanted to see some of the core arguments of this. I've read through this. Didn't see something that was like particularly shocking, but I wanted to write down. Oh, let's do this really quickly here. 1 second. I wanted to write down. There we go. The delivery estimates here. So if I go, I think I have to do this and this. There we go. So if I show here, we expect deliveries to miss current expectations by a wide margin. See material downside. That's fine. We already know that. Okay, this is what I wanted to show. Deutsche Bank is cutting their delivery expectation to 427. And so I think that's where you're going to see some of that pain. Now, the price target for them, I think their still is 218 DB. So we can write that down. Deutsche Bank has a price target of 218, but cuts deliveries to 427K. And this was on the 11th. And then the margin commentary here. Oh, full year, they're looking at 196. I'm going to write those down so we have sort of a longer log since so many of these updates are coming out. Expecting 1.96 million vehicles for the year. That compares to 1.81 million for 2023. So what is that? 1.96 divided by 1.81. It's about 8.2%. 8.2%. And then same time, we pressure margins or earnings. The company already announced deep price cuts. We already know that. Slower ramp in the Model 3 in the U.S. Earlier factory shutdowns as well. It's a tough time. That's why I think there's, going to be a lack of catalyst, at least just for the next 30 days before earnings. More of these downward revisions. Okay, here we go. This I thought was interesting too when I was covering it yesterday, or looking at this yesterday. We also see considerable downside risk next year and take our 2025 volume expectations to 2.3 million versus 2.5 prior. We think that 2025 looks a lot like 2024, given next-gen vehicles are not coming until the second half or the end of 2025. And our margin estimates are down to 15.8, with a 25% EPS at $2.90 versus the consensus at that's 8.2% growth. There we go. Okay, versus a 4.5% EPS projection now. So they see, do they give 2024 EPS? They see, oh yeah, here they do. 2024 EPS at 2.25. Wall Street currently sees $3.05. That's a bit lower. They see 2025 EPS at 290. Wall Street currently sees 405. Yeah. Okay, I'll throw that update on eHack. And then let me see if we got a rate update as well. I've been waiting for that to come through. It's already 6:12. It's flying by. Okay, so we are at... Oh, yeah. Okay, so we just went from 88% certainty of getting no cut in May to a 94% certainty. We went from... So we killed May. Now, June is actually sitting at 64%. That's interesting. And... Well, I guess if we add in the other, you're probably looking at closer to about 31.5% of no cut in June. So that puts you at about 68.5% chance of a cut in June. That's actually up a little bit. So you actually increase the rate cut odds for June, but decrease them for May. Okay, sort of been waiting for that. So we'll watch to see how that fluctuates. In the near term, we think volume and earnings could further dampen investor sentiment, blah, blah, blah. Okay. Whatever. I just wanted to show that was the Deutsche Bank piece. Some folks were asking about that. And if I look at the Wall Street consensus, which has been 490 for deliveries, we should be getting a rotation down on this. I'm just waiting for that to happen. I'm going to look right now. It still sits at 490. That's crazy. So, well, that'll get revised soon enough. Oh, well. So, all right. What next? Let's see what they got here.
Not to mention the fact that he's got some other things going on regarding Israel, and Senator Menendez, and Politico points out today that Schumer still uses a flip phone. So who knows what the radar looks like on that side of the hill.
Yeah, I mean, even if the legislation does not pass, there is still a hope, I think, on the part of Mnuchin and other potential investors that over time, given the focus on TikTok and its national security risks, that there is some sort of negotiated solution here which would end up with it being in U.S. hands, which they would obviously see as very beneficial. No sense on price either, given it's just very much unclear what it's worth without the source code and the algorithm, but clearly worth a lot given all those users.
Meantime, everything old is new again over at Under Armour. Kevin Plank coming back as CEO of the company that he founded. We're going to talk about...
Let's see if the Starship launch is... How far away are we on that? Because we can probably watch that too. Let's see. 10 minutes to go. Okay. T-minus 10 minutes. So we'll wait for that. That'll be entertaining. That'll be really close to when the bell hits. So we'll watch for that. Okay. Next, we are... Let's see what else people have to say. Here. What is this? Fed liquidity. Okay. That's fine. Let's see here. Fed liquidity is facilitating markets inflation fantasy. Fed's balance sheet continues to contract. Reserves keep rising. Okay. Let me see what else. That is not very entertaining. Okay. What else? Let's go over... why retail sales are a big deal for stonks. Okay, what do we have here? You can't blame traders for being confused, as a broad-based increase in PPI only adds to evidence that disinflationary forces have stalled at the start of the year. At the same time, soft retail sales raise a flag about the consumer, which leaves stocks in a tough spot. Fair. Rise in PPI should keep bonds under pressure. Oh, well, let's see if that's true. Bonds. Oh, yeah, that is really interesting. So you just shot up 4.3 basis points on the 10-year. Does that mean we just went more into inversion? Let me see. Let me look at the 2-year. So the 2-year's up, 3.8. Okay, so you actually uninverted a little bit. 210. As you get closer to recession, that's generally when you get a little bit more of that uninversion. Recession, ironically, would probably be good for certain stocks like Tesla. But you're still at negative 42 bips inverted right now. So still the most inverted you've really been since about December, where December, November, we were a little more inverted down to about the low 50s. Okie dokie. Oh, saw Hood is popping off. I think they released some trading numbers, which this kind of makes sense. You're up 11.8% here. And if I look at Hood, I want to look at the news for them because they popped some trading data out. Let's pooped it out. Okay, Robinhood. Funded customers were 23.6 million in February versus 23.1 in February 2023. So you actually have growth again. Remember, Weeble's about to try to IPO through a SPAC, reverse IPO. And Deutsche Bank increased their price target. Okay. So, yeah, Robinhood's really interesting. I mean, big explosion here. And just, frankly, the last, month and a half went from 11 bucks to 17. Let's listen in here for a moment.
And Mike, so it's not that surprising if you followed Under Armour carefully over the last few years, as I have, a lot of investors have, that Kevin Plank is back as CEO. He's been very involved, even as he stepped out of the CEO role about 4 years ago when Patrick Frisk came over. He was the non-executive chairman then. What is surprising about this announcement is that it's abrupt and the timing. Stephanie Lenartz was just put in place as CEO about a year ago, February 2023. She's barely into what she laid out in her 3-year plan. So that raises questions about why now. Company isn't saying, don't have answers as to exactly what happened here, just that it was a board decision. But you can imagine investors are asking, why wasn't she given the time to implement her changes? Did she clash with Kevin Plank, both in personality or in terms of the strategy on the growth plan? We know that Plank is aggressive, he's hungry, he's potentially impatient about the growth story. And that really gets to the problem at Under Armour right now. It's been this turnaround story, and the previous 2 CEOs have been really working on righting the ship, both in profitability and inventory levels, but it has not seen growth. And that is the problem. The brand, the growth profile, it's a fraction of what it was. Back in the heyday, this stock peaked around 2015. Kevin Plank presided over a tremendous growth period for Under Armour, but in the eyes of investors, it was sort of considered low-quality growth, ultimately, as to how he left. It came at the expense of profitability, and the growth hit a wall. And that's why...
Yeah, what's crazy about Under Armour is look at the stock. This is the month chart. Month chart. The stock went euphoric in 2015. And, I mean, it's been straight down since then. Oh. So, yeah, anyway, we are getting close to the Starship. And we're going to cover that. So, pretty remarkable. We got about 4 minutes to go on that. I'm going to go ahead and get that screen share up so we can see that together. Let's see here. Okay. I'm going to pop this thing out. Oh, there we go. Theater mode. Oh, I like that.
Mentioned a good point about the holds. We have an opportunity to today hold for a few minutes. And this is...
So I'm just going to mute that for the time being. And that way, as this gets a little closer, we can unmute that. So we've got about 3 minutes to go on that. So we'll keep an eye on that. But in the meantime, let's take a peek at some other things that are going on as they sort of prep with this. Pre-market, we've got Bitcoin down at 72.5, but I mean, you can't really say it's down. It's been kicking frickin' butt. Palantir just turned red pre-market. Going from the reds, you've got Under Armour down 5.6. Let me see what's going on with Under Armour. Under Armour. Somebody's like, how's your MicroStrategy short? I never shorted MicroStrategy. I love how people just say things and assuming they know. Under Armour, what do we got? Drops as founder, Plank returns as CEO. Under Armour cut to neutral or underperform. Whatever. Okay, so this is all having to do with the CEO transition. You've got NVIDIA down 1.5 this morning in the pre-market. Alibaba down 1.6 this morning. You've got Supermicro Computer 1.3. Tesla's down 70 bips. AMD's down 1. Enphase down 42. What's moving up? In the upside, well, Robinhood, we saw that. Mind Medicine. You've got Embraer keeps kicking butt. That company just keeps kicking frickin' butt. New York Community Bank at $3.80. Got JetBlue is actually up 86 basis points this morning. Williams Sonoma's up again a little bit. Apple's actually green by about 50 basis points. So we'll see what happens. We are now 2 minutes away from the good old launchy. And we did get, if you haven't seen yet, PPI and retail sales, somewhat indicating a little bit of a stagflationary environment. Not great. It's the kind of robbing some of the Goldilocks a bit. So we don't like to rob the Goldilocks, but yeah, all right, about a minute away now from this launch, so we'll cover this obviously. I'm just looking for a little bit more on the market since we're going to be going right into the bell essentially. So no, not really anything else new there at the moment. One more check. We talked about Mnuchin. Gosh, that guy's just consolidating money. But PPI has broken traders' disinflationary dreams. Producing prices add to signs of persistent inflation. Yeah, that's not good. Das ist not good. All right, let's go listen into this audio now. And let's go with this.
We hold at 40 seconds before, but it sounds like the winds are cooperating today. And we'd be able to move right past that, not tracking any other technical issues that could hold us.
Proceeding past our QD vent gate.
Through the QD vent gate, past the 40-second hold.
Go for launch.
Flight Director Ty Huntington telling the team we are go for launch. 20. So 20 seconds to go. Let's listen in.
T-minus 10, 9, 8, 7, 6, 5, 4, 3, 2, 1.
Wow, that looks nice. A beautiful skyline, too, for this.
30 seconds into flight, we are feeling the rumble. We are seeing 33 out of 33 Raptor engines ignited on the Super Heavy booster.
Nice.
Booster and ship, avionics, power, and telemetry nominal. Acquisition of signal, Corpus Christi.
Oh, cool.
continuing to get good call outs. Our trajectory looking nominal, systems looking nominal. Just amazing to see all 33 lit up once again.
That's pretty great work. All right, we're going to leave that muted here just for a moment. We'll just sort of have this going here because we are obviously here to watch El Market. So I'll just talk about the market while this thing does its thing. So this particular article here, producer prices paid to U.S. producers rise more than forecast. You saw that, and the bump here is now, the thing is, the bump that we're getting now is coming off of the bump that we had in January. So you're getting this fear that, oh no, is that structural inflation going to take longer to get down? And is J-Pow going to basically beat us up on that summary of economic projections? Me thinks so. We talked about it in detail, obviously, yesterday in the video. So we'll see what we get. But I just don't see a reason why J-Pow would be nice to us this week. It doesn't make much sense to me. But, you know, then again, I've been surprised many a time before. So I suppose we shall find out. Okay. So how about if I go... Ooh, that's kind of cool. Okay. There we go. Okay, we are now 2 minutes away from the bell. So we're going to cover this. And being 2 minutes away from the bell, we have... What's going on? Robinhood still popping off about 11.6%. Nice transition there on the booster. Okay. What about... Let's see here. Let's go... We're going to go off of this. I know this is interesting, but... I think we're kind of done with this. Little separation there, and you're off to space. Okay, cool. Very good. Very good. They did well. All right, here we go. So, pre-market, 11.7 on Rob of the Hoods. Oh, Robin Hood. Go Vlad, the Impaler. So, okay. Apple, Embraer, now 3.59 in pre-market. This one's just been killing it. So, when are we going to start getting AI planes? That'd be funny. They just come out and say, hey guys, we're now doing AI. Stock up. It's crazy. All right, let's get the bell.
ASP's down 8.
Yeah.
In a time where year-on-year shelter is almost up almost 6.
Yeah, it seemed like, look, to close some deals in the last quarter, they did have to ease back a little bit. So it is such a strong stock. It's basically at the highs, up 64% on a one-year basis. Still got the $5 billion buyback. It's a huge percentage of the market cap. But there is a little bit of margin hesitation, I think, because of that pricing in terms of the guidance.
The market continues to wait and see if shelter relief is going to creep into the macro data. Let's get the opening bell here and the CNBC real-time exchange. And the big board celebrating a recent listing, the iREIT Market Vector Quality REIT Index ETF. And at the NASDAQ, it's JAMF providing security for Apple devices as we, once again, Mike, in this range of 5170-ish after a narrow spread in the last couple of days.
Has been. And each day we're switching off between, narrow mega cap led and more broad. Today, some software in the lead like Oracle, ServiceNow, Microsoft. And this has been a little bit of the pattern of when, okay, yields are higher. Maybe there's a little bit of concern building about just the perfection of the macro backdrop. And you go to stuff that doesn't seem too dependent on it. That has been, this pattern here. I mentioned all these elevated sentiment readings and things like that. It's just one of those atmospheric conditions that says, we're not really set up for an adverse surprise, and yet the market keeps absorbing these potential, downside blips without too much trouble at this point. I would say, we're kind of sideways on the average stock for the past week, but that's after a great run.
Right. We'll keep our eye on financials today. This Goldman upgrade of Citi has gotten some attention. Yeah. Essentially looking at top-line growth, simplifying the business model, freeing up some cash on the non-core international business. Yesterday was B of A's Sutmeyer who said technically some of the support levels here are pretty strong.
Yeah,
All right. Let's see what's actually going on in L Stickies here. Okay, so I see triple Qs are slightly positive. That means the market's got to be slightly going positive here. You've got Snowflake turning negative. Ooh, Robin the Hood got a red candle here. Fat red candle on Robin the Hood. Tesla just goes positive. That's a fat candle to the upside. Looks like you've got the Qs. They're up 15 basis points, but you're kind of trading... you're kind of sinking a little bit there. You've got Enphase dipping a bit. You've got Palantir dropping 1%. I don't know if that's coming on the back of those insider sales. Restoration Hardware, 6 basis points down. Nvidia, ooh, it's almost barcoding here at the open. That's interesting. Coinbase down a couple percent. You've got ARMS up about 1.5%. Microsoft down 80 bips. Meta up, Microsoft is up 80 bips. I said down. My bad. Meta's up. Broadcom's up. Costco up again. You know, after they reported their earnings, they had a little ouchy-wouchy. But the last couple days, they've already started trending up again. Neo, 2.5. Let's see here. Western Digital trending down. Costco continuing to trend up. You've got Mind Medicine up 6.2%. New York Community Bank 3.7. Target 8 bips. You've got Robinhood still with the red candlestick. I was surprised by that. It looks like you had a lot of sort of pre-market buying maybe on Robin of the Hood in the morning here. Well, that CEO transition still on Under Armour, some pain there. Palantir's trying to come back. Enphase still getting whacked. Tesla still got some nice thick greens there on 44 bips, and the Qs are stuck, but they've been kind of at 15 basis points for a minute here. Apple 81, Embraer 4% on Embraer. Jeez, Lord. Okay, Nvidia is still down a bit. Coinbase just tanked. What happened? Bitcoin's at 72.3. Coinbase, I don't know what's going on here at Coinbase, but Coinbase is tanking here in the pre-market. You've got Nvidia down 1.6. Meta just turned red. Neo red 2.2. Mind Medicine up 5.5. Coinbase keeps going. It's down about 5.5 now. Let me see. Is that because they announced their convertible, but that was yesterday's news, wasn't it? I think that was old news. That was yesterday morning or the evening before that. And then it was sort of traded yesterday, I thought. Let me see what news there is. Coinbase announces pricing of upsized offering. That was on the 13th. Coinbase upsized offer, $1.1 billion. Oh, they did increase their offer size a bit. But only by 100 mil. So an extra 100 mil cost them 5.5 on the stock? That seems a little weird. See, if I go out to the hour chart... This is about, they announced their offering here-ish. That's why you saw this red. Yeah, I think this is just an extension of basically the stock getting hammered a little bit. Apple here. I can't believe 4% here on Embraer. This seems a little bizarre. Oh, Nvidia is starting to recover, or trying to at least. And let's see here. What else? Macy's up 3%. Where did that come from? Okay, let's see here. Robinhood's only up 6.9 now. It's up like 12%. Just, what, 10 minutes ago? That's kind of remarkable. So, Costco, 65 basis points. Apple, 94 here. CrowdStrike, 91. ARM, 1.3. You haven't really seen a down movement on ARM yet. Right here, right before the lockup is when you got the movement. I covered my initial short, I think it was the day before. It was this day, on the 11th. And I've been waiting, sort of watching ARM to see, okay, when are the sales going to come through? Because that's when I want to consider reopening. Just because you get so much buy the rumor, sell the news on these sort of things. Okay, what else? I like this move here. Qs are now rotating positive, and not only are the Qs rotating positive, but you have this Apple movement that might be trying to push the Qs up. I ship that. Not super opposed to that. Let's see here. Somebody in the chat says Bitcoin to 0. Oh no, no. Good thing this isn't real life. People come after him. But yeah, you do have a bit of a dump there. Okay, so what else? Then we have B of A's HeartNet sees characteristics of a bubble. Ooh. So let me see if I get that document directly. I think that'd be very interesting. So let's see here. If we go to BOFA. Oh, BOFA. Let's see here. BOFA. No, that must have been yesterday then. Is this? Yeah, it must have been yesterday. I will check yesterday. BOFA. Nope, don't have it yet. Okay, fine. I'll just look right here. So what are they saying? Markets are showing characteristic signs of a bubble in the record-setting surge by tech's Magnificent 7, says B of A's HeartNet. I mean, he's always been kind of a bear, though. But I'm going to write down some of his comments here. So B of A, HeartNet, and I'm going to throw that up on eHack so we have a little summary of it. So, again, keep in mind, he's been a bear, but let's see what his argument is. Kind of like, you know, Mike. It's the B of A version of Mike Wilson, which I still love reading the Mike Wilson stuff. I want to see where his head is. I like seeing these things. So even if they don't agree with me necessarily, I appreciate their perspective. With inflation reaccelerating, growth a little softened, and risk assets unscathed, it's very symptomatic of a bubble mentality. That's interesting. So growth, he's basically arguing growth slowing, inflation reaccelerating, yet no damage yet to risk assets. Symptomatic of a bubble. Okay. Oh, he said that on Bloomberg TV. It wasn't exactly a paper note. Got it. Okay. Tremendous euphoria. Record highs 17 times this year. Yeah. Other strategists recently downplayed concerns that the mega cap run is overdone, including JP Morgan. For HeartNet, investors are front-running the Fed. Remember how we talked about that? We're like, you know, the market, the reason I came up with the Nike swoosh is I'm like, the market's probably going to try to pre-price in the Fed action, right? Markets are front-running the Fed. Yes. Yes, they are. Yes. That's why we came up with the Nike swoosh. Okay, that's not surprising. Let's see what else the suits say. The suits. Weak retail sale. Okay, we saw that. We talked retail sales. What about yields? Where do we sit with those now? Okay, Bitcoin's almost under 72. Yields are up 5.9. So, yields 5.9 BP up on 10-year. And then what's the 2-year up right now? The 2-year's up also 5.9 on the 10-year and 2-year. Both of those are up right now. Freaking mortgage rates will go up again. Oh, I'm raw. Okay. Then we talked about the Thiel dump on Palantir. Palantir. I'm going to put that up on eHack as well. I think that's an interesting piece. So let's throw that up. We're going to go with, so Thiel dumps 174 million of Palantir, and then you had Carp dumps, what was that number? What was the number? Carp. 4.8 million. Oh, that's a poverty number compared to 174. Still a lot of money, folks. So, okay. Okay, so, okay, there's Robinhood trying to pop back up. All right, that's fair. You've got BTC's getting support at 72. Okay, that I think is interesting. Bitcoin bounces at 72K, so that's good support. And then Coinbase increases offering to 1.1 billion from 1.0 billion, and that's led to some pain here in the stock. Nvidia's down 1% still. Apple still starting to rotate down. Embraer, I wonder if there was news on Embraer, because that kind of move on the little plane company that I like to invest in is a little odd. But I support it. We have... Oh, it might be Boeing pain. Now, a volume spike. And American Airlines orders. Yeah. I guess, yeah. Well, that was earlier this month, though. American Airlines ordering a bunch of Embraers. They usually use these Embraer planes for, like, regional flights. Pretty good for those. You know, those, like, hour-long flights you gotta take. They're a little closer. Let's see what the historic volatility and implied volatility is here. You do have, okay, implied volatility of 5 point... Okay, well, they're... Hold on. When are their earnings? Earnings... Embraer. Earnings call... When is it? I cannot find it. Okay. See, one source says here it's not until April. And somebody else indicates here in the chat it's tomorrow. But I don't know. I don't know why it's so hard to... I'll figure that out and I'll deal with it later. Well, it should be on their website. Let me go. Embraer Investor Relations. Usually they'll do... If you go to press releases, they'll tell you that they'll sort of press release the date that they're doing. So if I go to, let's see, Embraer news. Nope. No indication just yet. All right, fine, whatever. Okay, what else? So, yeah, BTC's really playing the 72 level. Very interesting. Palantir is only down about 40 bips. The Qs are up at 21. Starting to get that red candle over here. You've got Google up 1.4. Apple's up percent. No, Nvidia couldn't keep it. It was starting to rise. Couldn't keep it up. ARM's up another 2%. I don't understand Wingstop. That one pisses me off. I have no play on Wingstop. I just think it's a riot. A riot and a ripoff. Alright, maybe that's evil, but that's a thought I have. Amazon. How we been doing lately, Amazon? How we been doing? Straight up on the week chart. It's also been doing pretty good, honestly, on the day chart here. Just slowly, peacefully laddering up. Went long Dell. Dell. How's Dell, Steve? Dell's at 110. Nice move since after that Nvidia shout out. Boy, they moved so hard after that Nvidia shout out. It was really impressive. So, okay, Stellantis 13 bips, Rivian's down 3%. Domino's, Lowe's. Oh, Lowe's on retail sales dipping a little bit, but who cares? They've been straight up. I think this argument about sort of like the bubble, the Hartnett bubble here is interesting. There are some people who think that we're due for, you know, a big rug-in the market, but people always say that. So I don't know if that's true. That's like every single market, there's somebody who says everything's about to collapse. Okay, what else? Anything else? Producer prices jump. We saw that. BOJ to end negative rate policy in March. We talked Mnuchin. Saw the test flight. No way. BlackRock says it's time to buy real estate as prices bottom. Let's go. Go House Hack. If you want to learn everything we do with how we operate with House Hack and what we got, come to the event. You know, we're going to have a lot of real estate talk. The event's June 21 to 23rd in Vegas. Meet me there in person. That'll be really fun. And Ben Malo will be there. Ross Gerber will be there. We've got some other speaker announcements coming, so buckle up. It'll be really fun. June 21 to 23. Go to meetkevin.com to see more on that. Blackstone says real estate prices have bottomed and there's a great opportunity to move fast and buy assets at beaten down prices, according to Blackstone. The perception is so negative, and yet the value decline has occurred. So you get into this bottoming period, that's when you want to move. Yep. Blackstone says do it. Now here comes everyone. Damn you, Blackstone. So that's pretty exciting. 1 min BTC support. Yeah, it's not really much of a BTC support. That's for sure. But when you're on the 1 minute candlesticks. Did you talk about the ECB starting 2 rate cuts by summer? No, we haven't touched on that yet. The ECB is a little bit closer to recession than America is. Let me see here. What was I going to look at? Oh, BTC. Oh, yep. Nope. There it goes. Broke right through. Edit. Falls through. Just a few minutes later. Blackstone. We're going to write that down really quick. Blackstone. Real estate bottom is in. Buy real estate now. Okay. Well, we'll take it. Yeah, by the way, we're getting it is surprising. We're talking to our DST attorney yesterday because there's so many people that are like, Kevin, if you could help us 1031 exchange our real estate into House Hack real estate, and we don't have to, we could defer taxes, and you guys manage it with no fees, like no asset management fees, acquisition, disposition, whatever, please, we're all in. So that's really exciting. There are some people who are very, very excited about that. We have a little sheet that we can hand out now. If you want it, just email us at ir@househack.com. We'll send some more information to you. Since October. Okay. And warrants are due, if you haven't heard that yet, for House Hack. And then, of course, we do have the accredited investor round that ends at the end of June, just after the event in June. You can 1031 your 1 mil. You can, if you have real estate you want to sell, you could 1031 into House Hack real estate. And imagine, like, our goal is basically to make it so that you could 1031 into stock. Now that it would be real estate, like stock of real estate, but it would give you that liquidity. So imagine this: you turn your rental real estate, like this is think about the flow. You own multifamily real estate or single family real estate, income producing real estate, commercial real estate, whatever. You sell it, you don't touch the money, you 1031 the gains into, you give it to an exchange accommodator, right? The exchange accommodator holds your money, you identify a replacement within 45 days, and then which could be what we're doing if you want, and then you could 1031 into it within 180 days, that's closing. Then when the money's in there, it sits there for about 2 years in the DST, obviously earning a yield, and you know, property appreciation or whatever. And then you could basically, when we do this, you 1031, essentially, again, it's a different section of the tax code, but it's basically like doing another exchange into a stock of real estate, like a investment trust or whatever. And so you basically go from owning real estate to owning something you could swipe up on sell, and you've deferred taxes all the way up to that point. Now, obviously, if you sell the shares at the end of the day, at some point you'll pay taxes. But if you hold those shares forever, you go from managing and owning real estate and potential capital gains liability to potentially moving that to something somebody else is managing for no fee, and having liquidity whenever you want it, which is kind of cool. So a lot of people are like, please tell me more. I think it's like the next frontier finance, because really what you're just doing is you're moving from active management of real estate to passive without paying taxes, which is mind-blowing that that's even possible. But I know a lot of people who are retiring are like, please get me out of real estate. It's a lot. I love it. But then again, I'm also not retiring. I'm 32. So, anyway. So, what else we got here? So, then you've got BTC. Somebody's asking about liquidity here. If you 1031 into a DST, you can't flip out of that for 2 years. That's true. And you can't really, that's because the IRS doesn't want you to flip real estate. But once you get out of that, you actually get substantially more liquidity once you exchange out, because, then you could swipe up and sell whenever you want, which is kind of cool. It's a really incredible innovation. But the same thing is true if you 1031 into more real estate. You're not supposed to do it more than every 2 years because you potentially violate the IRS rules. So you have to be really careful with the IRS, and you have to follow really specific guidelines. Otherwise, you get screwed on 1031s. People who know 1031 understand that. J Fund, we'll have to do some explaining there. There's a little bit more involved in that. But anyway, just email us, ir@househack.com. No, exactly. Once it turns into like a stock, no, Mike. But what you can do is you could go, usually what you'll do is once you're in a DST land, you kind of DST to DST, and so you kind of move and exchange between those. But usually that's not worth it because the fees are ridiculous. And so we're setting it up with no fees. And a lot of these companies, they charge 6 to 8% in fees. It's insane. And that's just up front. We're like, no. That's crazy. So, anyway. Okay, what's going on? Oh, the market just dropped. What happened? The market just pooped itself. Oh, dirty diaper. What the hell? Shucks. So everything looks like it just kind of went red. You've got the Qs that just went red, 45 basis points. We were positive 15. Tesla's down 2. It's in no man's land on resistance. Enphase just broke the 119. If you close under the 119, it's a little problematic. Your next stop is 113, which is where we're now. You're at, this is terrible for Tesla. This will be the full candlestick right here today under 175. That's terrible from a TA basis. Like, the short term just is a little poopy doopy. Apple's up 1%. Embraer's still rocketing. Nvidia's down 3%. Yikes. Coinbase down 6. ARM is actually up. It's a volatile market here. Disney's down again. SMCI's down another 4.5. Walmart down 10 basis points. What's green? Like, oh yeah, Fisker declaring talking with bankruptcy attorneys. They haven't technically declared bankruptcy yet. It's down 50% on the day. RIP. Yeah, Bitcoin falling a little more here. And so, the only thing really up is Apple, Google, Embraer, Robinhood, Macy's, actually. How does Macy's go up on those retail sales numbers? Let me look at that, because I don't recall. It's right here. Let's see. General merchandise up 0.4. That might be why. And miscellaneous store retailers went up. Because e-commerce down and retailers in person up. That's actually very interesting. Yeah. Are the Qs trying to bottom? You're getting a little stuck there at about 41, 43 to decline. Let's see what they're saying here.
In place. That's why we think the trend has a lot more legs to it.
Yeah, well, and so the total addressable market, how much has it increased as a result, for example, of the demand from sovereigns? We've been talking about that. Jensen has been in a number of countries that seem to have ambitions to have their own.
Yeah, no, Brian, there's a misunderstanding there of what you're saying. that doesn't make sense at all. It's not a 1031 into house hack. It's a 1031 into real estate. That's very different.
Can be anywhere between, $20,000 to $30,000. So you need tens of billions of dollars. So if you take the total number of countries in the world and say even a small fraction of them wants to have their infrastructure, that's multiple billion per country. So, we think the market for sovereign AI infrastructure could be tens of billions of dollars.
Steve here says evidence continues to mount that proves the consensus view on inflation returning to 2% is wrong. Well, with the last few months of data, you appear to be right. You might end up being wrong, or you might end up being right. We don't know. I guess we'll find out. But it is very interesting. It's very, very interesting. So, let's see. And we're going to get to the course member live in just a moment here.
Is going to be the high of the month in the wake of that PPI number this morning. We'll talk more about it as Squawk on the Street continues. Don't go anywhere.
Okay, the Qs are trying to rebound. You've got the Qs at only negative 37 right now. NVIDIA back up a little bit, back to 2.7. And Coinbase still 5.5. You got some real movements here. Neo down 3. Yeah, Supermicro 3.5. What are the big losers? Rivian's down another 4. Wait, are they under $10 yet? Oh, how did Petco go down 12%? Rivian's at 11.22 and Woof is woof. Come on. Oh, earnings. But earnings were, earnings were yesterday, okay. Comp sale, okay, what happened? Oh, a slight miss. 1.5 billion expected net revenue versus 1.55 on guidance. Oh, come on. That's ridiculous. 12% on that? That's a joke. It's a joke, my friends. It's a joke. NVIDIA 2. Yeah, a little bit of pain over here. What's going on with BTC? Oh, BTC trying to pop off again. There we go. There we go. Right back to that 72 figure. All right. So anyway, yeah, if you have questions on everything I described, I understand it's complicated. Mostly only people in real estate, I think, will understand the whole 1031 thing. But we're happy to explain much more. Just email us at ir@househack.com. We'll take care of you today. And yeah, from there, thank you so much for being here. I appreciate y'all. I'm going to push the button now.
Go yourself. Is that clear?
All right, we'll look at some of the stakes while I press this outro, all right? Here we go. I love y'all. Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate and actively manage the ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than HouseHack, nor am I presently acting as a market maker. All right, there it is. I'm going to post the link to the course live, and then I'm going to go make another cup of coffee. So we'll see you shortly. Thank you, Steve. Thanks for saying hit like before you go. Appreciate y'all, and see y'all soon.